Buy the dip part 2. I want to talk about, give an update on how I find these stocks to trade. But as you saw from the title, and as I just told you, it is part 2. So if you want all this to make the most sense, then go and watch part number 1 first. I'll put a link down below in the description box if you're watching at YouTube, or if you're just watching on my site, right down below the video itself, I'll put a link, because this will, like I said, make that much more sense. Because in part 2 here, I'm not going to talk about the general philosophy, the thought process behind it all in terms of what you're looking for, how to do it, how to scan for these stocks. I'm just simply giving an update, kind of the rest of the story in terms of, well, what happened after part number 1, because in that video there were some scanning that was done, and at that point it was okay, these are the stocks that showed up, these are the stocks that meet the criteria of the strategy. But then of course, because it was real time, we never actually saw what happened with those stocks. But in this video we are going to see what actually happens, and I want a little spoiler: things worked out very, very nicely. But on that note, please don't think that what I talked about in part 1 here and then part 2 means that you just go and do what what you're taught and then you just start buying things. There is more to it, because you want to make sure that you're getting good entry points. You want to make sure that the risk makes sense relative to the reward and all of that. So I don't want this to come across as, hey, this is all you have to do, and this is, a magic pill, some sort of holy grail strategy. Because yes, they worked out well, but no, they're not going to always work out as well as they did. But I did want to give you this update because it does show that when you put logic, when you put a philosophy behind your approach, again, all talked about in part 1, then yeah, you can put yourself in some really worthwhile positions. So let's see how things turned out. Now, one of the stocks we came across was BRQS, and this is what things were looking like when we pulled up the chart. And as the strategy led us to, we knew that it would be pulling back. And right there you can see that it did indeed pull back with the gap down. Had a pullback right here with that lower shadow. So in other words, it did pull back. It dipped. And buy the dip strategy. How did things turn out from there? And you can see the next day, good solid green candle. Next day went even higher, and then a bit more of a pullback the next couple of days. But I mean, think about it. It was alerted there. There was the dip, and then a beautiful, beautiful move to the upside. Once again, to reiterate, am I saying that you just find these and then just randomly buy? No, there's more to it than that. But as I stated in part 1, I just want to get you pointed in the right direction in terms of a general framework to start to begin to work within, because it does make sense on why this ultimately did go back up higher. So right there, BRQS turned out very, very nice to those that bought the dip. Another one we looked at, was CYN. And you can see, all right, well, what happened on CYN? Well, you can see that there was a gap down. So right there, the price gapped down, aka the price dipped. And then check out what happened that same exact day. Dipped down and then just ripped to the upside. But that wasn't all that happened. You can see right there, actually another dip on that day, because the price closed there and then it opened up down there. So another dip, returned back upwards very nicely. And then check that out, kaboom, and went even higher, and then went even higher most recently. So again, part 1 located this right here. There's a couple of different dips along the way that resulted in a very, very nice move. And then we talked about MULN. And MULN, it did come up. It was part of the scanners, but it was ultimately denied because it didn't meet the criteria in terms of what we were looking for. And just as an update, well, what happened with the rest of that one? And I'll just kind of go through it. You can see right there, a little green candle, a little miniature candle there, then broke to new lows, and has done essentially nothing at all. So right there and in there, MULN, the one that we said, yeah, this is not meeting the criteria. Again, why didn't it meet it? Go watch part 1. If you haven't watched part 1 yet and you're still watching this, what are you doing? Poor life choice on your part. But yeah, there you go. The one that said, yeah, it doesn't meet the criteria is the one that ultimately did absolutely nothing. So there's a little update just in case you wanted to more so see how this all played out. So I guess we'll call this a little 2-part mini class here in terms of, buy the dip and, how you can start to get started in all of this in terms of what sort of mindset should you have, what's the philosophy behind it, And now you can see, what has ultimately played out. So I hope this helps. If you would like more videos like this, then leave some comments down in the comment section. Let me know. Hit that like button. Those things go a long way. If you have any questions, again, leave those down in the comment section. And if you are interested in this broker here that I'm using here to illustrate the charts along with what was used in part 1, I'll put a link down below to that. That is an affiliate link. So if you sign up with them, you're going to get free stocks and stuff because they're always running promotion. But I also get something. So just want to keep that in mind. But yeah, if you like what you see here in terms of the charts and think that they're pretty fancy looking, especially when you factor in they're free because they come with the platform, then like I said, you can get some free stocks with their promotion down in that link below. But anyway, thanks for watching. Take care. And yeah, get out there, buy some dips. But again, got to do it with a smart, risk-based logic behind it. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.